Hi everyone and welcome back to another video. Today we'll be performing an analysis over Microsoft stock trading under ticker MSFT and assessing whether it presents a solid buying opportunity. Let's have a quick look at their charts to get a high-level idea of how the stock has been performing over the past little while. Now looking at the year-to-date chart, we can see that the stock is down about 2.6%. If we jump over to the 1 year, the stock is up about 1%, and looking at the 5 year, we can see that the stock has some significant growth, being up 121%. Now, Microsoft's last year has been pretty challenging. Despite decent earnings, beating analyst expectations isn't enough. Falling short of forecast expectations, which carry significant weight, has been causing the stock to decline. Now, let's have a quick look at their Q2 earnings release summary. We can see that revenue was $69.6 billion, up 12%. Operating income was $31.7 billion, up 17%. And net income was $24.1 billion, up 10%. Now let's take a closer look at segment revenues, and in particular, I want to point out their cloud revenues in this table. We can see that quarter over quarter, cloud revenue growth has been falling from 24% in Q2 of 2024 to 21% in Q2 of 2025. In addition, the gross margin percentage has also declined from 72% in Q2 of 2024 to 70% in Q2 of 2025. Essentially, what this means is that not only is their revenue growth rate declining, but they're also spending more and more building out data centers for AI, and as a result, eating into their gross margin. However, if we look at the commercial bookings growth, we can see that it has significantly grown over the years, and currently sits at 67% in Q2 of fiscal year 2025 versus 17% in Q2 of fiscal year 2024. In simple terms, there are $298 billion worth of revenue to be received once certain performance obligations/conditions of the contracts are met. So this is a pretty good thing to see as these numbers are growing. Therefore, the additional spending right now and the decrease in gross margin is justifiable. So although these are some great results, they were followed by a not so great outlook on future forecasts. Now, for example, in Q2, Microsoft's finance chief calls for approximately $67.7 billion to $68.7 billion in fiscal third quarter revenue, compared with the $69.8 billion consensus from analysts on Wall Street. Now the breakdown is as follows. Productivity and business processes can see revenue of $29.4 to $29.7 billion. The intelligent cloud, it'll see about $25.9 to $26.2 billion, and more personal computing will see about $12.4 to $12.8 billion. Now some qualitative factors to consider are Microsoft's relationship with OpenAI. During the quarter, they invested an additional $750 million. In addition, the Stargate project could attract another $500 billion in investment for OpenAI, leading to further growth and innovation within the company, and ultimately trickling down to Microsoft as a result of their partnership. Now, Microsoft's CEO reassured investors that OpenAI has a lot more coming soon and that everyone should stay tuned. And of course, the DeepSeek news has also had an impact on the share price for Microsoft because of the heavy investment in OpenAI, but I don't think people should really worry, as I covered that in another video a few weeks ago. Alright, now let's have a look at the valuation of the stock using a multiples valuation model that I've created. Looking at the trailing PE multiple and comparing it to Amazon, Apple, Nvidia, and Google, we can see that the average trailing PE multiple of those companies is about 39.72. If we take their latest EPS from Google Finance and multiply it by the average trailing PE ratio of these companies, we arrive at an intrinsic value of $492 for Microsoft. And the current price for this stock is $408.43. This offers about a 17% upside. Now, if we consider a 10% margin of safety or MOS, we can say that there's about 7% of real upside potential. Let's look at one more metric, and that'll be the forward PE ratio. We can see that it currently sits around 30.98 and is at a level seen back in November of 2023. Now, given that the trailing PE ratio is around 32.9, this indicates that future projections are indicating some earnings growth. This is true since the average analyst expectation for fiscal year 2025 is around 13.16 cents per share versus the 11.8 in fiscal 2024. In addition, we can see about 12 cents projected growth in earnings between March and June. Lastly, looking at analyst price targets and ratings, we can see that a majority of them rate the stock as a buy or strong buy and have an average price target of 508.05. Going back to my calculation based on PE multiples, we were around the 492 mark. So overall, I think Microsoft stock looks pretty attractive right now in terms of its price and outlook. It's been sluggish over the last year or so, but with the investments going into AI, the Stargate project, and the growth in revenue obligations in their cloud business, there's a lot of potential here. As always, thanks for watching until the end of the video, and if you enjoyed, please leave a thumbs up, subscribe, and comment your thoughts below.